Hi people, welcome back to my YouTube channel. Today I'm going to do a question on management accounting, and this was tested in August 2023. So I'll read the question, and before I continue with this, please subscribe to my channel. We have a target of reaching 1,000 subscribers in the next 30 days. So before you watch this video, please subscribe to my channel and also like my video so that it can reach many people. Welcome back now. So I'll read the question. Delaware Limited would like to evaluate its performance for the next 5 years, commencing from the year 2023, based on the company's revised strategy. The following details relate to its main product, Lotus, and estimated changes in prices and costs per annum. So we have 2023, then we have the growth rates, then we have average annual demand in units, we have selling price per unit, we have direct material cost per unit, direct labor cost per unit, variable production overheads per unit, fixed production overheads, administration overheads, variable selling and distribution cost per unit. Then we have fixed selling and distribution costs. Yeah, that amount. So there are also growth rates throughout the year. So required: A, prepare the forecast statement of profit or loss given the current projections. B, determine the break-even levels in units and revenues for each of the next 5 years. C, using suitable graphs, present a summary of revenues, profits, and break-even revenues for each of the next 5 years. So this question had 20 marks. So this is how we are going to tackle this question. So we'll start with the prepare the forecast statement of profit or loss given the current projections. So this is what we'll do. I will do it here. I will do it down here. So just say what was the name of the company. So it was Delaware. Delaware Limited. Forecast statement. Forecast statement of profit or loss. Yeah, it's for 5 years. So I want to the years. I want to be specific with the year. So I just bold that. Then I'll create the bottom border. So the years, before I put that, the years begin from 2023. So if it was for 5 years, it will end in 2027. 27, yeah. Yeah, so I'll just go to series, the way I've taught you back then. You just go to fill, then you go to series, then it's within a row. Yeah, then the step value is 1, then I'll end at 2027. Yeah. These are shortcuts for you to move with speed. So after that, I just bold this. Then once I've bold that, I'll just create the bottom border. Create that bottom border. And I'll just highlight this. I'll merge the center. Sorry. Let me undo that. So I'll pick this to merge and center. Then I'll also pick this, merge it and center. Yeah, so it looks a little bit neat. Yeah, so I'll start with the demand, average annual demands in units. So I'll start with this. So just allow me to copy everything. Yeah, so I'll just extend this. So I'll start with 2023. So the average annual demands in units was 50,000. Yeah. Then, now for 2024, there was a growth rate of 10%. So I'll pick this. Then I multiply by 1 plus the growth rate. which is 10%. And I lock it. Yeah, lock it. Then I enter. So once I enter, I'll have 55. Then I'll come to the next step. And also, let me see if I can drag at this point. See if it will be possible. Yeah, so when I drag at that point, these values come automatically because I've locked the 55. When you check at 2025, you'll realize that it's D27, which is this one, the 2024 times 1 plus D7, which I've locked here. So it's okay. So I'll go to the next item, which is the selling price per unit. Yeah, so I'll start with for the 2023, it was that. Yeah, and there was a growth rate. So I'll pick that, then I multiply by 1 plus the growth rate. Then I lock the growth rate. Yeah, so that I can drag. So that when I drag this, it will automatically change. So I'll go to the next item, which is direct. Yeah, so this is what I'll do. I'll just say here I will put revenue. Yeah, so this will be my revenue. So my revenue will be selling price times the annual demand. So that when I drag, I'll have those values. So let me just increase this. So expand that. Also expand that, and also expand that. So I'll have these values all through. Yeah, so the next item will be the direct material cost per unit. So we'll have the direct material, so I'll pick it. Let's say equals to will be 90. Then it has a growth rate. So I'll pick that, and I multiply by 1 plus its growth rate. Yeah, and these are variable costs. So I'll now come and add them. Then is when I'll multiply to get the total variable cost. Yeah, I'll show you. So I'll multiply by direct material cost. I'll multiply by the growth rate of 10%, and I'll lock it so that when I drag, I'll have values all through. Yeah. Then I'll go to the other item. Go to the other item, which is the direct labor cost per unit. So I'll pick this. Direct labor cost per unit. Was 200. So I'll look at the growth rate. So I'll multiply that by plus 200 by 1 plus the 10%. Then you lock it. You lock that completely. Yeah, so that when you drag, you have your growth rate. So I'll go to the next item, which is variable production overhead per unit. So let me extend this a little bit. Yeah, so at 2023, it was 40. Just come here and say equals to 40 times bracket 1 plus the growth rate. The growth rate was 10%. So unlock it completely. Lock it completely so that when I drag, we'll just copy, just adjust the values. So I'll go to the next item, still under variable cost. We have variable. We have this variable selling and distribution cost per unit. So I'll pick it also. Yeah, I've classified all this into variable costs. Yeah, per unit. All these are per unit. You see, I'm not multiplying by the average annual demands because these are per units. I just come here and say equals to variable selling and distribution 30. The growth rate will be 30 times 1 plus the growth rate, which is 10%. Then you lock it completely. Then you drag. Yeah. So the sum from direct material all the way to variable selling and distribution cost will give me the variable cost per unit. Yeah, will give me the variable cost per unit. So I just come here and say variable cost per unit. Yeah. So the variable cost per unit will be equals to the sum all the way from direct material cost per unit. Yeah. Yeah, up to here. Yeah. So when I have this variable cost per unit here, so I just drag. Yeah, and you realize from this statement, I've only left out fixed production overheads, which was coming per year. Yeah, and administration overheads and fixed selling and distribution cost. Yeah, these were per annum. These are not part of the variable cost. So I've only left out the fixed cost. So after getting that variable cost per unit, so I'll be able to get the total variable cost. So just say total variable cost. So my total variable cost will now you'll see I'll take the variable cost per unit, then I multiply by the number of units, the average annual demand in units. So I just multiply by that and I enter. So once I enter, I just drag this all to, yeah, and the values will be there automatically. So what I will do, let me just bold even the revenue. And let me also bold the total variable cost so that you can see the values on your side. You can compare from your workings. Yeah. So after that, now we'll have what we call contribution. We'll have what we call contribution. Yeah. So the contribution will be, yeah, contribution is the difference between revenue and the total variable cost. So the contribution will be, I'll have that minus this. So with that, I'll just drag it through. Copy. So I'll go to the next item, which now I'll go to the fixed cost. So I'll come here and say fixed production overheads. So I'll pick this, the first one. And it was how much? Fixed production overheads, 100,000. Yeah, but you recall it also has a growth rate. So I'll pick 100, multiply by, sorry, and then I multiply by 1 plus the growth rate, which was 5%, and I lock it. Unlock it, then I drag. Then I'll come to the next item, which is administration overheads. So my administration overheads, I'll start with this. I'll pick the 80. Then it also has a growth rate of 5%. So I just multiply by 5%. Multiply by 5%. I'll enter that so that I drag this all through. So I'll go to the last one, which is the fixed selling fixed selling, so I'll pick it. Yeah, so I'll go to fixed selling and distribution, which is the last one. So I'll pick it. I'll pick it here. No, enter. So once I have that, I'll check at the growth rate. So I multiply by 1 plus the growth rate, which is 5%. And I'll lock this so that when I drag, it copies automatically. Yeah. And after that, I'll have the net profit here. Net profit. Yeah, so my net profit will be, I'll take my contribution, then I subtract the sum of that. So I'll have 6.76. So I'll just drag this all through. Yeah, then I'll also bold the net profit. Yeah, and with this, you are done with prepare the forecast statement of profit or loss given the current projection. Yeah, so we have done the profit or loss. So this is the profit. Yeah, this is the profit, the net profit. So I'm done with part A. So I'll go to part B, determine the break-even levels in units and revenue for each of the next 5 years. So this is what I will do. You know, with the break-even point is whereby break-even point is whereby profit is 0. The net profit is 0. It means that total revenue is equal to total cost. So if total revenue is equal to total cost, then it means that the profit now is 0. So this is what we are going to do. You will have to copy this data. Yeah, so you'll copy, then you will just come here and paste. Let me see if I'll paste it to the formula. Sorry, values. No, let me copy with that. Yeah, so let me have this data here. Yeah, you just copy the data. Then after you have copied the data, you check whether the formula applies. So I just click this and I click this. Yeah, so there was no formula. So this is what I'm going to do. I'll introduce the formula here. Actually what we did. So I'll start with that. That's okay. Yeah, we have a selling price, but now for revenue, my revenue will be this. Yeah. Once you copy, you now introduce the formulas because you can't run anything without the formula. So once I'm done with that, I'll just drag all through. Yeah, so that when you click this, you'll be able to see. Yeah, you will be able to see the values. So I'll go back to variable costs. Yeah, and I'll also do the same. I'll sum the variable costs. I'll sum the variable cost from direct material in the way. Yeah, I want the formula to be within this what I've copied. That's why I'm repeating the same thing. So that when I drag, you can see, yeah, everything is captured. Everything is captured. So I'll go to total variable cost and I'll also change it to formula. Total variable cost, I said, was this times the annual demands in units. So I just multiply by that. Then I'll drag. Yeah. What I'm doing is not new because I copied, and when I copied this data, I lost the formula. So I have to introduce the formula so that when I'm now doing the break-even analysis, all data is captured. Yeah. Everything is captured. So then contribution, we agreed that the contribution was revenue minus total variable cost. Yeah, and then drag it so that it's copied. Yeah, that's okay. Then fixed, that's okay, that's okay. So I'll go to net profit. And net profit, I'll take the contribution minus the sum of all the fixed and administration cost. Yeah, so I'll pick that and I'll enter. So once I enter, I'll just drag. Yeah. So once I've dragged, now the formula is captured. And we know, I told you that you go to the question, they're saying determine the break-even levels in units. Then the units are here. Then and revenue for each of the next 5 years. So we look at the break-even in revenue is here and the number of units. That's what they are requesting for. And I told you that at break-even point, let me just bond to this years. Yeah, at break-even point, the net profit is supposed to be 0 because total revenue equals total cost. So once you have that knowledge, you just go to data. Sorry. Data. Then you go to what if analysis. Yeah, you go to what if analysis. Then you go to goal seek. Yeah, goal seek will be able to assist you to calculate the break even. So we set cell C59. So cell 59 is where the cell where the net profit is. So I'll start with 2023. So I'll set this to 0 because I want the net profit to be 0. But I want to change what? I'll change the cell where there is units because we were told units and revenue. So I just come and pick. Let me see. So I'll just come and pick that. Yeah. So I'll select average annual demands in units. Then I just say okay. So once you stay okay, it will run all the way up to 0. Yeah. Then I just say okay. So you see that the values here has changed to 0. And even the units here have changed to 1714.2857 from what? From 50,000. So it means that break even in 2023, the units were supposed to be 17 and the revenue was supposed to be 8571.42 from 25 million. Yeah, so that's how you do the break even. So you do for every year up to 2027. So let me go to the next year. Yeah, so I'll go to the next year and I'll do the same. I'll go to data. I'll go to data. Then I'll go to what if analysis. Then I go to goal seek. Yeah, then for this, now I'll select this and I'll change it to 0. Yeah, I want the net profit to be 0. But by changing which cell? By changing the cells with the unit, this one. By changing cell with unit, so this one. So just say okay. Yeah, my target value, it's 0. But you see the current value. Yeah, so let me just say okay. Yeah, so it will change to 1953.43. So I go to the next item again. I go to 2025. I'll do the same. You go to data, then you go to what if analysis, then you go to goal seek. Then I'll select this. Then it's supposed to be at 0, but I'll change the units. The units are here. Yeah, so I just say okay. Yeah, then my current value will be 22. Yeah, so the same, I'll say okay. Then I'll go to the next one, data, then what if analysis. Then I go to goal seek. Then I'm changing this to 0. Yeah, I want the net profit to be 0 because we know that the net profit at break-even point, net profit is 0. So I'll be changing which cell? I'll be changing this, the cells with the units. Then I just say okay. Yeah, so it will run to that. Yeah, so just say okay. Then I go to the last one and I'll do the same. I'll go to what if analysis. Then I go to goal seek. Then I'll set this. Then to value 0. But I'll be changing I'll be changing this. Yeah, I'll be changing that. So just say okay. Yeah, and it will run up to that. So I'll have 3615 up to, yeah. So I'll have the units to be 36. So you can see even the revenue has changed. Yeah, has changed. So the question, determine the break-even levels, units, and revenue for each of the next 5 years. So they're here. The break-even, at break-even point, these are the annual demands, while these are the revenue. So you can just highlight, you can highlight this. Yeah. You can write them down or you highlight. So just bold this. At break-even point, then revenue also, so bold this. So at break-even, those were the values of units and revenue. And that's how you are supposed to take the 5 marks. I think that was 5 marks. Yeah, you get the 5 marks free. So you go to part C, using suitable graphs, present a summary of revenues, profits, and break-even revenues for each of the next 5 years. Yeah, using a suitable graph, present a summary of revenue. So this is what we are going to do, this part C. So what we'll do, I'll just pick the years the way they are and just copy, then I drag. Yeah, then the first item they're saying we pick is a summary of revenue. So I'll go to revenue. Yeah, the one on the original data. The one on the original data. The one on the original data. Yeah, you have to be very careful. You don't pick the revenue for the break-even. Yeah. So you start with the one for the original data. So I just say equals, then I copy that. Then I just copy it all through. Yeah. Then what was the next item? The next item was profits. Profits. Yeah. So the profits will also on the original data. So I just come and say, because I called it net profit, so I just copy it. Yeah, I'll come here and copy the values they use. Then the other item they're requesting is break-even revenue. So the break-even revenue is this one now. So I just write here break-even. Break-even revenue. So the break-even revenue will be this will be. Just say equals, then I'll copy on the through. Yeah. Yeah, so that's the data you have to present. So we'll use this to do a dashboard presentation. Using simple graphs, present a summary of revenue, profits, and break-even for each of the next 5 years. Yeah. Yeah, and these are the 5 years, 2023 to 2027. So this is what you do. You just come and highlight this. Then you go to insert. Then you go to recommended as usual. Then you check at what you think is presentable. All these are okay. What they have recommended is okay. But they want a graph. Yeah, so a graph, I'll pick this. Yeah, let me pick that. Yeah, it's even with the values. Then I just say okay. So once you say okay, then the chart title, just say revenue, comma, profits, and break-even revenue. Break-even revenue. Then I just pull that. Then I'll drag it down here. Then I right click. Yeah. So with this, you are done. You are done with that question. You are done with those questions. And you can see the analysis. In 2023, we have revenue is represented by blue, net profit. I think this is This orange, or yeah, orange. Then this other one looks like gray, yeah. So break-even revenue is represented by gray. Yeah, so you can see the trend. In 2023, revenue was higher, then net profit was down there below revenue. Then we have the break-even. At break-even, they are low all through. Yeah, so these are very good presentation. These are very good presentation. Yeah, and with all that, you will be done with this question, and you get yourself a total of 20 marks. 20 marks. 20 marks. So this question was testing your knowledge on forecasting and management accounting, whether you still recall that or what happens at the break even. Yeah. You just have to know that at break even, total revenue equals to total cost, which means that the profit now is zero at that point. So once you know that, you introduce the goal seek now to do the analysis. Yeah. So that's why we introduced the goal seek. And now they are even testing your knowledge of how you know how to do presentation, the visualization of data. Yeah. So that's all. That's all for this question. And until next time, bye.